Major funding for these programs is made possible by grants from Chase Commercial Term Lending, New York Community Bank, Capital One Bank, Perfect Building Maintenance, M&T Bank, Customers Bank, Genova Burns, Terra CRG, Meridian Capital Group. Additional support is made possible by AKA Hotels Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Colliers International NYC, Collins Building Services, CPEX Real Estate Services, Cushman & Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, Eastern Union Funding, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Friedman, Handler Real Estate Organization, HAP Investments, Hersha Hospitality, Hodges Ward Elliott, Inc., Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, New Banks, Newmark Grubb Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Stonehenge Partners, TD Bank, The Continuum Company, The Moynihan Group, and these friends.
What happened to banking? What happened to that friendly banker, that teller, the people over there? The world. There's this computerized things. You can copy your checks. There's ATMs. There are other things happening. And where do banks want to lend? Who do they like? Internet companies, franchises, restaurants, factoring, finance. What's happening with the world of banking? To answer those questions, I've assembled this group of dynamic bankers to provide their insight on how they see the world, where is the banking headed, and what's going on. My guests, they include David Bagatelle, who is the Executive Vice President for Sterling National Bank. He's also the President of the Metro New York region. Paul Letourneau, who is the Deputy Head for Commercial Banking, Head of Healthcare Lending for Bank Leumi USA. Chris Giamo, who is the President for the Tri-State Metro region for TD Bank. And last but not least, who I'm very happy to see back over here, the Executive Vice President and Co-Head of Commercial Banking, Gino Martocci with M&T Bank. So it's interesting that everyone in this room has been in banking for 25 years. What's kept you in banking for 25 years? And what has happened over the past 25 years? Part of it was, how did you get into banking originally?
Citibank had a program that recruited off campus, and so I was fortunate enough to get a job in 1990, just before the recession hit, I think.
Right, but part of what we were saying before was in the past, there were training programs, right, Chris?
Yeah, Mike, and just like Gino, when I got out of college, same thing, got into a training program, comprehensive program at Bank of New York. And those programs were great where you learn the whole business, in banking within a 12-month cycle, retail, commercial, consumer, government, et cetera, as well as the back office. And over the years, I think banks have disinvested in such programs.
But you were saying today you're continuing to invest, TD?
We do, and we do have training programs, and we're looking to invest more now to onboard more people and grow the next generation, I guess, of bankers and leaders.
So that's the question. David, and Paul, how do we build that next generation of bankers? Unfortunately, banking is not in the same sexy point as working as you were saying. You were out in Google land and LinkedIn. These people, they have a different atmosphere. They have to learn what a tie is. Flip-flops over there. It's a different world. It's not as sexy. They don't have ping pong tables over there and there. And you open up all these stores, so you need more people. You have a higher need than perhaps what David has or what Paul or Gino have.
Well, you said before about technology. I think banking, and I think we'd all agree, is a people business, and I think it'll stay a people business. And retaining employees is as important as recruiting new employees because, it's very expensive if you have a high attrition rate. So we focus a lot on reward and recognition programs, whether that's both compensation but also recognizing employees. And I think, you have to do a lot of surveys and pulse surveys to find out what makes your employees happy and keeps them in a good environment where they want to come to work, because we all know we spend more time at work than we do not at work, and we have to make those environments, enjoyable.
One of the areas that people aren't really aware of, I am because I'm in inside banking, as they would say, inside baseball, is that bankers today are compensated on their profitability, on their goals. How do you do that? And I know I want to bring up David and the others.
Well, we have a profitability for every relationship and for every product that we sell, and and there's a variable contribution that we'll calculate that a percentage of which is earned by the relationship management team.
Now, how much can a banker, let's say, on their base salary, earn additional compensation based if they reach a certain level?
Well, it's a very wide range. It's between 35 and 300%. So if we're doing a lot of syndications now, and if someone's responsible for a big syndication, we've had mid six-figure bonuses for RMs because of syndications primarily.
David?
With us, compensation is a big part of our model. Been utilizing more or less the same model since my days starting at M&T and at Republic, and we pay our teams based on a team-based profitability. There's a team P&L, and the teams get a percentage of the bottom line of their business. Everything adds into that. Their deposits, their loans, there's a contribution, their fee income, their expenses, and you come down to a bottom line number. So each of our teams and our team leaders are essentially running their own bank within a bank. And our teams, assuming they do what they should be doing, our team leaders, some of whom can make as much, if not more, than executive management at the bank. And we have zero issue with that. Of course, part of the compensation, in addition to being cash, is equity, because we want these people to feel like they have skin in the overall game.
Yeah, I mean, there's just one piece of the puzzle is the actual incentive comp. I mean, there's a lot of other things that we're doing different at Leumi to bring in that new talent. So what is the new talent? The new talent is the millennials, right? Highest average age of the next generation is 23 years old. Yeah, money's important to them, but there's a lot of other things. You mentioned ties a while ago. We a lot of times have business casual type environment for a bank, and a very conservative bank overall. So there's all of those other things that we're bringing in. Leumi Experience, which is an ongoing training program, not only once you get in, but throughout. Everybody that comes in has a mentor. I mean, those are the things that we're really doing to make sure that those individuals and those new employees stay sticky.
Employee engagement's it's a big part of it. And I was going to bring up the millennial thing. The way we're all baby boomers, so for the most part, and the way that
I feel good that I'm much younger than all of them.
But the way that we were brought up in the corporate world and the way that we started is much different than the 22, 23-year-olds that are coming into the workforce want to be treated, and you have to handle them differently. This is the generation where they got the participation trophies. It wasn't just trophies for winning.
But you see, you don't have the opportunity. If I walk into a TD bank and I have a dog, I can get a dog biscuit. I can walk in, still 7 days a week. The hours may have changed a little bit, but the people over there, I don't have to have gates in front of my windows, okay? I may see a New York City policeman standing in the branch, but it's a different environment, okay? People see TD, I'd say, more. I know it's a major commercial bank, but the consumer sees TD as the larger, friendly bank over there, more consumer-oriented. M&T in New York, okay, as opposed to in other parts of the place, is more of a commercial bank, okay? You're not really looking for...
But you highlight a couple things. A lot of the compensation structures today are dependent upon, you have to balance the credit aspect of things, right? And one of the things that has gone away in most banks is really a formal credit training program. We've had for 30 years a training program that brings in graduate students, undergraduate students. It's been very successful. People have moved up through the ranks. But we really need to enhance our credit training program, because as we compensate people based on production, them understanding credit and their ability to add value to the client is critical for understanding credit. So we're actually spending a lot of money now in developing a credit training program. Now, the issue is, of course, that as soon as you train them, they become a hot commodity in this marketplace, and that's part of the balancing act.
15 years ago, I'd say maybe 25 years ago, they were check cashing companies, okay? Check cashing stores are really no longer here. It's no longer that big item over there. So today, what has happened is, the branches have changed. The stores, as you would call them, have changed. You're even taking anything off the ground floor. You have very few over there. Where do you see the future of bricks and mortar with regard to TD?
Well, there's a lot of movement in retail, and as you talked before, fintech is coming in, and consumer behaviors and preferences are changing, and I would call it kind of an omni-channel approach where people want to do their banking or have the ability to do their banking through mobile, through online, through phone, and through branch, and utilize technology in the branch, such as smart ATMs and tablet technology and whatnot. But we do see a need for the brick and mortar. We may not need the size, the larger, big behemoth stores that you had in the past. You may need smaller, more nimble locations, because there is a higher migration to using technology rather than standing in a line for a teller, when you can do the same transaction or any transaction you want at a smart ATM machine.
Now, one of the biggest items for the commercial bank is the remote access. I mean, people don't send their assistant or someone from their office too often down to the bank to drop off the checks. It's really remote access. I mean, that is, the future of commercial banking, and that's an important aspect of that. How important is it when you take a client, and I know this has happened, by certain banks, as opposed to, people, there are transactions on mortgages, over there, and people say, hey, I took the mortgage, but I don't want to have banking with you. Banks today, even banks like New York Community Bank, are saying, who had at one time said, I don't care if I have your deposits. They want more account services.
Yeah, we're very, at Sterling, we're very relationship oriented. We expect our clients to have a holistic relationship with the bank. With that being said, Check 21, which brought in remote deposit, brought it into being in the mid-2000s. It's obviously very prevalent out there. We all utilize it very heavily. I think.
So you walk into an office, you got 12 remote access machines over there. That's, it's like the medical records. They don't interconnect to each other. So somebody has to have. I have the M&T remote access. I have the TD remote access. Right.
Well, hopefully they only have one.
Yeah.
Right.
Hopefully just M&T.
Yeah.
Right. So, but what's becoming more important, and what we're seeing it go a lot lower in the food chain from a corporate size standpoint, is traditional cash management. So, to a certain extent, the need even for a remote deposit is going out the window, because now clients that in the old days, a $5 or $10 million company didn't, know what even an ACH was, and nowadays they don't even. There's no need for even checks. So that's sort of where things are headed.
Yeah, I mean, we're spending a significant amount on our Treasury solutions and Treasury services, mobile, online, and we're primarily a commercial bank, so we don't have that retail foot traffic, right? And so that's an important aspect of our growth strategy.
I think rationalizing this omni-channel delivery and the expense associated with it, and making sure it's what the client wants to do, that's really going to be the key. And you talked about recruiting. I mean, we're technology companies, right? Yeah. We're data companies and technology companies, and while it's difficult to compete, obviously, with a Google, there's a lot of exciting things that are happening in financial services that allow us to recruit good people, fortunately.
I still remember about 15 years ago when I was involved doing some consulting for Deloitte & Touche, banks didn't want to lend to startup technology companies. Has the world changed? You know, there were certain markets that lenders were, startup companies was one, startup technology was two, restaurants was three. Where are the opportunities in lending for banks like TD, M&T, Leumi today?
Well, I think, the opportunities are vast and all over. You talk about startup companies. I think with the new regulatory requirements, it is a little bit difficult because the cost of capital is quite high on some of these startup companies that may not have be a secured transaction. And I think the risk profile there is outside of your traditional commercial lending kind of scope, unless you're a real niche player. But, I would say that the competition is at all-time heights. And so I think everybody's focused on, the same pie, so to speak. And I think the focus has to be on the relationship management side, where I think customers are looking for more trusted advisors than transactors. And I think that's an important piece if you're going to compete in any of the lending space.
I've consulted with banks for over 30 years, and one of the things that I always emphasize, and I see it today again, is if the banker understands your specific business, okay, the healthcare lending market, which I've always been involved with, and I would train branch people and other people to the terms and the knowledge and what the different areas are, on the receivables, Medicare, Medicaid. I think that's an important trend. I mean, that's one of the greatest virtues that you've really done in the metro market, becoming the healthcare preeminent. And people would say, how is a bank called Commerce, a TD, going to compete with Chase? You took it away from them, okay, because you went into the specialty over there. Sterling has always been, a great entity for asset-based lending, while, certain banks didn't want to do asset-based lending because it's tedious or other areas. So where do you see the opportunities? I mean, like we were talking, Paul, before you went out of the jewelry business because it was a treacherous business.
Right, but we've taken the same lead where I'm national head of healthcare, and we found that we had that expertise. And so when you're going out and you're talking to a client and you don't know how their business operates and you're not adding that value, then you become price and you become structure competitive. So what we do is we look to add that value to their operations, whether it's a holistic view like our Leumi Tech organization, or whether it's in the specialty niches that we have in media and entertainment and in the healthcare spaces. And we also leverage the existing experience and expertise of our parent, which is tremendous in a lot of different industries. And actually our strategy going forward is looking at some of those other niche industries that are the next, let's call it oil or whatever that might be. It's not oil industry per se, but it's what is the next gold, right?
But
and so we're looking at
in
that.
banking, we've always had certain banks, more of the savings banks were oriented towards mortgages, commercial mortgages and residential mortgages. M&T in the New York market, you had more of that than you did in
commercial real estate we have.
Right.
No, we have both C&I and CRE. We're about equally split in our portfolio, a little more C&I actually. But as much as things are changing in the industry, we've been 30 years and longer focused on relationship banking. We're focused on understanding our clients and being there when they need us in good times and bad. That doesn't go out of style, right? That's a simple...
It's a trusted advisor concept.
It is a trusted advisor
Right.
concept, and it sounds simple, but many banks don't do it because they get carried away in good times and then they retract in the bad times. We try not to do that.
So here's a question that I've always proposed, during my seminars and other things. How do you make the determination who's going to be the next, let's not take technology, who's going to be the next Ralph Lauren in the apparel market? Who's going to be the next Steve Witkoff, in the real estate business? How do you sit there, and you want to do this because if you're not, somebody's going to get that client. Somebody's going to get that relationship over there. How do you grow that relationship, and how do you get that gut feeling of who's the right person?
I was going to say, I think it comes down to the people. I think as you're more experienced, you're able to judge character. Character has always been one of the 5 C's of credit. In my opinion, it's the most important. I think it's also the most important when you're assessing new clients. I mean, I'll give, as an example, We had a company that we started with when it started, an electronics company, believe it or not, based in New Jersey. We remember when they were $5 or $10 million in sales. This past year, they did $300 million in sales. TD is distributing to their retail clients their products. To everybody opens up a small business account. So, those are the kinds of, the people there were people that we felt very comfortable with, and we felt were sort of going to be the next big thing in that space.
I think it's about your approach. So, I had a boss a long time ago who always said, balance sheets and P&Ls don't pay back loans. People pay back loans, and the owners do.
Still true today.
So I think when you're doing your due diligence, you have to understand who the owners are and who the people are, particularly in the entrepreneurial space, which is probably where most of us play. These are closely held corporations where, and during that due diligence, you understand the people, you try and learn their business, but you really understand how well they know their business. And that's where you're really placing the bet. Obviously, the balance sheet and the P&L and the numbers all have to make sense, but you're really placing your bet on the ownership of that organization.
We spend probably 50% of our time getting to know the person itself, and we don't lend to the company, we lend to the people.
It's all about the people.
Yeah,
it's all about the people and your people and the expertise that you develop over a long period of time.
Yeah, we're unique in that a number of the folks in our senior management group, as you know, Michael, are entrepreneurs themselves. So, I'm sort of the school, it takes one to know one, and hopefully that puts us in a better position at times to be able to sort of find that next Ralph Lauren, as you said.
In this market specifically, one of the areas that's growing by leaps and bounds is what we call the TAMMY. TAMMY world, okay? What's your involvement and feeling of because it's a variety of areas in TAMMY. You can't look at, it's 4 different markets, okay?
Technology, advertising, media, and information, and we're all over it. Matter of fact, 4 of our industry streams touch each one of those. And that industry what's called TAMMY, the multiple industries in New York has grown, I think, about 20%. It's still not 1 out of 10 like the financial markets are, but it's still a huge population. And if you think about what I said before about the millennials, whose 23 highest educated body of workforce that's out there, they gravitate towards that. And where do they want to live? They want to live in urban areas, right? And so that's why our multifamily practice is very strong. So. Yeah.
One of the biggest areas, probably the largest taker, securer of space last year in New York was the shared office companies, the WeWorks, the other entities over there. How do you look at the shared office company, and how do you look at the role of a bank within that? Because these entities are taking like buildings, at 1460 Broadway, the Himmel-Maringoff property, they took 22 floors of the building.
We did 100 Wall Street for WeWork, but the Rudens are behind it.
Right, so you're looking at the Rudens as opposed to WeWorks, okay? But how do you look at the WeWork idea? Because when world is great, it's fine, but I still remember, unfortunately, since I'm the younger baby boomer here, okay, that I do remember recessions, and I do remember 2001, 2 sides, the recession and then the terrible events of 9/11. I remember 2008, and I go back in the past. And there were companies like WeWorks in 2001. There was a company called TechSpace. There was one, Regis, that went out of business.
So we bank the 2 largest of those ilk. They're clients of the bank. We obviously we look at all of the numbers and make sure that every deal makes sense. We happen to think that model happens to be a good model, and we look at it, as you said, there's 2 ways to look at it: banking the company and also banking those that utilize that space. So that's a big part of our going after the TAMMY space, is trying to provide services to not only to the lessor, but also to the lessee.
That's exactly how we look at it as well. We're also involved in that. We look at the underlying real estate, the location. Typically, they're in urban areas. They're in very well-performing urban areas. And so you have that underlying collateral for the event that might happen, a recession. But then we do the same thing. We actually go in and we partner with them we set up a complete structure of what we call Leumi Tech, which adds any resource that they may need for a startup. And so it's a tremendous value add. And we're not talking about lending at that point. We're talking about just basic 101 banking.
I think
and these
part,
people
I
need
think
that.
part of the role, it's going back, and David and I started in accounting. One of the roles of an accountant was, not to be an auditor. The accountant was supposed to be the business advisor. What has happened is, in many cases, the evolution of banking is, the banker of today, the banker who's going to get the customers and who's going to do that, is more of an advisor also. You're giving them advice and you're providing that input. And in the same manner as we were talking before to Chris in the green room, as the baby boomers get older and they have more retirement, there's this bigger need, of private banking. Wilmington, you acquired Wilmington a number of years ago. You acquired TD and all the others. How much of the private banking spectrum do you see today in the future?
Well, I think it's important, and I think as relationships, the heightened competitiveness in the marketplace, there is probably a desire from the consumer for a one-stop shop. And that doesn't mean that they're going to consolidate all their financial services in one. But if you're not offering that and playing that trusted advisor role to an entrepreneur where his or her business objectives and personal objectives really become intertwined, and if you're not there with leading edge products and services to meet those needs, someone else will meet them, and then you can lose that relationship. So we've made big investment over the past 3-4 years into wealth, and it's a big part of our business and a big part of our future growth, I think.
Look, if you really truly are a trusted advisor, and we've had many companies and entrepreneurs for generations, right? We want to be there to help advise them on how to tax efficiently move those assets to the next generation, or maintain their company, or really fulfill whatever their goals are as they get older and as their kids come in or not come in. We want to be there for them. So through Wilmington Trust, we're able to do that.
With like a minute and a half left, where do you see the best opportunities over the next 10 years in banking? Chris?
I think it's going to be an interesting ride as the consumer preferences on the retail side shift. I don't think they'll shift as quickly as maybe the media says that they will, but the payment space and technology are going to be important. So I think there's opportunity there. But I do think in the wealth space, there's a lot of opportunity as the generation of entrepreneurs and business owners now, that wealth will transfer in the near future. And, it's a complex business.
Gino?
Data, technology, but also go back to what I said before, simple blocking and tackling will continue to be important.
Dave?
I'm not going to be industry specific, but I'll say the New York metro area. It's the best, in my opinion, best banking market in the world.
Everybody wants to come to New York. They want to come to this market, and the banks are out there to service the need. Paul?
Yeah, I would say outside of all the technology, I think it really comes back to always putting the client first. I mean, if you have that always in your mindset, I don't know how you can succeed.
And I think it's banking, even though it's technology, continues to be a people business.
Absolutely.
And I think the people relationship and the people here is the demonstration of who the banks are in the community, and that you can talk to yourselves and to your own customers is what makes the successful banker, and that's what we're going to see in the future. I'd like to thank Dave, Paul, Chris, and Gino, and I'll see you next week.